What if I told you the most dangerous threat to today's global economy isn't inflation, isn't interest rates, and isn't even geopolitical conflict, but a ghost? A ghost from nearly 100 years ago. A ghost we thought we buried with the Great Depression. A ghost that is quietly, methodically reappearing because the financial world of today, 2025, looks terrifyingly similar to the world of 1929, right before the greatest economic collapse in modern history. But here's the real mystery. Why, despite all our technology, data, central banks, and economic experts, are we repeating the exact same mistakes that triggered the Great Depression? Are these similarities just coincidence? Or is history trying to warn us before it repeats itself? Let's find out. To understand why the ghost of 1929 is haunting us now, we need to go back before the crash, to a world overflowing with optimism, booming markets, and unstoppable growth. Because the story of 1929 didn't begin with collapse. It began with euphoria. The 1920s were called the Roaring Twenties for a reason. Factories were booming, electricity was spreading, cars were rolling off assembly lines, and an entire generation believed the future could only go up. Sound familiar? But beneath this glittering surface, something dangerous was building quietly, invisibly. A system built on cheap money, rising debt, and investors who believed markets could never fall. You'll notice the pattern soon, but not yet. Because the real twist is that the mechanisms that led to the 1929 crash, overconfidence, leverage, easy credit, and financial engineering, were considered brilliant innovations at the time, just like today. The origins of the 1929 crisis begin with a simple idea: you can get rich, even if you don't have money. Banks in the 1920s offered loans to ordinary people so they could buy stocks on margin, meaning with borrowed money. People were buying $100 worth of stock, with just $10 of their own cash. The rest, borrowed. Cheap credit plus rising markets equals explosive growth. Stock prices soared, investors multiplied, greed drowned out caution, and the Federal Reserve, it kept interest rates low, believing growth would never stop. If you replace margin loans with zero interest rates, crypto leverage, housing bubbles, or speculative tech stocks, you'll see why the ghost of 1929 is appearing again. But the real danger wasn't the borrowing. It was the belief, the absolute conviction, that markets could never fall. By 1928-1929, the US stock market was unstoppable. Companies saw their stock prices multiply even if their profits didn't. Sound familiar? Financial newspapers declared a new era of permanent prosperity. Economists insisted crashes were old-fashioned. Ordinary workers poured their life savings into stocks. Banks lent money as freely as candy, and the entire system became dependent on continuous rise, a dangerous illusion. But beneath the surface, cracks formed. Corporate earnings slowed. Farm incomes collapsed. Wages stagnated. Wealth inequality skyrocketed. Debt ballooned to record levels, yet nobody cared because the market kept rising. Right up until it didn't. The crash of 1929 didn't begin with a bang, it began with a whisper. A few investors quietly sold off large stock positions. Markets dipped. At first, nobody panicked. But then margin calls started. Remember that borrowed money? When markets dropped even slightly, borrowers had to repay loans instantly, but they couldn't. So they sold stocks to raise cash, which pushed prices down further, triggering more margin calls, which forced more selling. It became a death spiral. By October 24, 1929, Black Thursday, markets collapsed so fast that banks couldn't answer phones, newspapers couldn't print updates fast enough, and investors couldn't process what was happening. Then came Black Monday and Black Tuesday, the most violent market crashes in US history. Trillions in today's dollars vanished. The ghost of infinite optimism turned into the ghost of infinite fear. But the crash was only the beginning. After the crash, things didn't go back to normal, they got worse. Unemployment skyrocketed, factories shut down, banks collapsed, one after another, families lost everything, millions went hungry, countries raised tariffs, global trade evaporated. The financial system imploded. The Great Depression wasn't a single event. It was a chain reaction, a chain the world didn't know how to stop. Governments tried everything, lowering interest rates, injecting liquidity bailouts, Stimulus programs, banking regulations, public works, spending, but none worked, because the damage was too deep. By the time recovery began, the world had changed forever. The 1929 crisis exposed a brutal truth. You can't fix a system by treating symptoms while ignoring the disease. Leaders made three key mistakes. Mistake 1: cutting spending during collapse. Governments tightened budgets when they needed to stimulate the economy. This deepened the recession. Mistake 2: raising tariffs, the Smoot-Hawley Act. This killed global trade and spread the depression worldwide. Mistake 3: saving banks but not people. Bailouts went to institutions, not families or workers. Demand collapsed. Businesses starved. Unemployment exploded. Sound familiar? These mistakes echo loudly today because our world is repeating the same logic, just with modern tools. This is where the ghost of 1929 becomes chillingly real. Let's compare then and now, side by side. 1. Record debt levels. 1929. Margin debt hit historic highs. Today, global debt has crossed $315 trillion, the highest ever recorded. 2. Speculation mania. 1929. People borrowed to buy stocks. Today, people borrow to trade crypto options, AI stocks, and real estate. 3. Extreme wealth inequality. 1929. Top 1% controlled 40% of wealth. Today, the top 1% again controls nearly 40%, a near-perfect mirror. 4. Reliance on cheap money. 1929. Low interest rates fueled speculation. Today, a decade of near-zero rates has inflated massive asset bubbles. 5. Overvalued markets. 1929. Stock valuations reached unprecedented highs. Today, price-to-earnings ratios in tech and AI are nearing bubble levels. 6. Global instability. 1929. Rising nationalism, protectionism, political tension. Today, trade wars, sanctions, conflicts, supply chain fragility. 7. False sense of security. In 1929, experts said the economy is strong. In 2025, experts say the same. But in both eras, consumer debt, corporate debt, government debt, and market speculation are dangerously overstretched. History isn't just echoing, it's repeating. The real danger today isn't an exact replay of the Great Depression. The real danger is complacency. Just like the 1920s, people believe modern economies are too advanced to collapse. Just like 1929, people think central banks can always step in and save the market. But here's the uncomfortable truth. Central banks can print money, but they can't print confidence. They can't print stability. They can't print trust. And trust is exactly what breaks when markets become dependent on speculation and debt. The ghost of 1929 isn't a zombie from the past, it's a warning about the future. So the big question is, are we headed for another Great Depression? Probably not. But the risk of a massive correction, a modern global Great Reset of debt and overvaluation is higher than most people believe. The world today is more interconnected, more leveraged, and more sensitive to shocks than at any time in history. A single trigger could set off a chain reaction, a major bank failure, a sovereign debt crisis, a collapse in commercial real estate, a runaway inflation cycle, a geopolitical shock, a tech bubble burst, a credit freeze, just like 1929. The danger is not one event, it's the system's fragility. One booms always create illusions. The 1920s felt safe until they weren't. The same illusion exists today. To debt is the real hidden danger. Whether in 1929 or 2025, when borrowing fuels growth, collapse becomes inevitable. Asterisk 3. History doesn't repeat exactly, but human behavior does. Asterisk. Greed, speculation, and overconfidence are timeless. The ghost of 1929 isn't here to scare us. It's here to remind us that no matter how advanced we become, how digital, how global, how data-driven we are still vulnerable to the same emotional cycles that toppled the world a century ago. The question isn't, will another Great Depression happen? The real question is, are we paying attention before it's too late? If you found this deep dive eye-opening, and you want more long-form documentaries, exploring the hidden patterns of history, finance, and global power, don't forget to like this video, share your thoughts in the comments, subscribe for more history myths economics investigations, Turn on notifications so you never miss an upload, because understanding the past is the only way to protect the future. And the ghost of 1929 isn't done speaking yet.